rental property depreciation. Hi everyone, great to have you on another video. This time we'll be discussing various aspects for the property depreciation report, including the methods of depreciation, the types of depreciation, as in what depreciates, the benefits of depreciation, an example of the tax effects from depreciation, and then lastly, we're going to be looking at what happens when you come to sell a property that has been depreciated. So stick around till the end so you take all that in. First, we have two types of depreciation. One is the straight line method, which means the same amount is depreciated over the life of the asset. And the other one is called diminishing value, and that is a higher amount of depreciation in the first few years, and then that amount of depreciation continues to be reduced as the period continues. Number two, the different types of depreciation. The building depreciates on a straight line basis. The assets also depreciate. Think of the assets as your air conditioner, a washing machine that's fitted in, an oven, so on and so forth. That can be depreciated either using the straight line method or the diminishing value method, which is the quicker way of depreciating it. Now, with the diminishing value, you can actually put certain assets, depending on their value, in what they call a low value pool. And the low value pool allows you to depreciate that asset at 18.75% in the first year. For the following years, it's 37.5%. Lastly, the land, well, that doesn't depreciate. The land always, generally speaking, appreciates unless there's something wrong with the land or with the area, or there's potentially just cycles in the building, in the property industry. Number three, the benefits. Depreciation allows you to reduce your liability. So if you're in a payable position, that will reduce the amount that's payable. If you're in a refund position, that will increase the amount refundable. Now, if you're in a payable position, that just might tip you over to a refund position. In addition to that, because you have less of a liability, you have more cash to put into your offset account, which will reduce your interest repayments, allow you to pay down your loan faster, and ultimately it gets you that much closer to acquiring another asset. Number four, let's look at an example as to how the depreciation can actually help us. Say someone is earning $270,000. The depreciation just for the building component is $5,000. That's going to reduce the total taxable to $265,000. Now, at $270,000, their tax payable was $101,617. At the $265,000, because of the depreciation, their tax payable is $99,192. That's a benefit of $2,425. Depreciation for the building generally lasts for about 40 years. So if we multiply that by 40, we have a total benefit over that period of $97,000. Now, if we use the same amount of depreciation and the example of someone who's earned $50,000, that reduces them to $45,000. At $50,000, their tax is $5,967. At $45,000, their tax is $4,392. That's a reduction of $1,575. Multiply that by 40 years and you have a benefit of $63,000. What we can see from this example is the higher your income, the more beneficial the depreciation is. Number five, what happens when we sell a property? Assume we sold the property for $4 million. We acquired it for $1 million. The profit is $3 million. Assume also that we claimed depreciation of $50,000 throughout the period we held this property, and we held it for a few years. Now, we're going to need to add the $50,000 to the $3 million But because we've held it for 12 months or more, we get the 50% capital gains tax discount, which ultimately means we're going to be taxed on $1,525,000 at our marginal tax rate. This example and this video assumes that the person who's holding the property is an individual. To claim depreciation, you need what is referred to as a quantity surveyor's report or a depreciation schedule. That outlines the amounts that can be claimed for both the building and the asset components of the property. It also lists the assets that are being claimed and will show both methods, both the straight line and the diminishing value, and give you the option to choose which one works best for you. As a bonus for watching this video, we've been working with various depreciation report providers to save you hundreds on the preparation of the depreciation reports. These names include the likes of Duotax, Depreciator, and MCG Quantity Surveyors. You'll find the affiliate links either in the description section or in the comment section. That's just one way we are looking after our viewers and our clients. As always, thank you for watching. We hope this video was beneficial to you. If you know anyone in your network who could benefit from this, feel free to share it with them. Subscribe and like the video. Provide some comments as to what you thought of it or what you'd like us to cover in the next video. Till the next one, we wish you all the very best.